Looks like we still have some folks joining us, but we're at about 4:30. I want to say good afternoon and welcome to this month's edition of Market Happy Hour. Again, thank you for spending part of your day with us. My name is Alex Starkey. I'm an advisor with CWA. Today, we have a very special conversation with a guest speaker and one of the preeminent voices in geopolitics and economics. Before we get started, a quick housekeeping note. We do ask that you do not record or distribute today's conversation in any format. Our panelists this afternoon, my esteemed colleagues, our Chief Investment Officer, Lewis Johnson, our Director of Research, Zev Abraham, myself, as well as Velina Tchakarova. Now, with the time difference between Naples and Vienna, Austria, it's logistically impossible to have her join today, but we do have a conversation that happened earlier between her and Lewis. Now, we will have about 10 to 15 minutes of questions at the end. Slightly different format today, so we are going to hold questions to the end, although we do love to keep it conversational as possible. The final ask, we find your feedback very insightful. Please complete the survey at the end so we can keep these market happy hours as value add as possible. For today's agenda, Lewis is going to introduce us to Velina, her background. We have their conversation, a quick recap, and then 10 to 15 minutes of questions and answers with everything from economics to geopolitics. So Lewis, over to you.
Thanks, Alex, and welcome everybody. I can't tell you how much we appreciate the time you spend with us. Kind of look behind the curtain a little bit at our research process, see the kind of things that we're working on, the kind of questions that we're asking. And today is a little bit of a different effort for us in that in this instance, we had to have a recorded conversation with our expert, Velina Tchakarova, who lives in beautiful Vienna, Austria, but the time zone made it too complicated for us to do that live. So what we did do is Velina and I had a chat just about some issues that we think were important. And we decided that we would share her answers in this kind of format. And then as Alex described, we'll have kind of a more extensive kind of Q&A period at the end. So please fire your questions away as you have them, but do understand we'll kind of wait till the end so we can get through all of the points that Velina and I discussed. So on the screen, you can see, Velina's kind of mini qualifications. I can tell you that kind of how I found Velina is that, we try to consume a lot of information and especially the things that involve, solving problems or where the markets might go. Many times, some of you have heard me say I'm kind of the chief worry officer here at CWA. And there's a lot of stuff to worry about in these markets. And Velina, thankfully, has been worrying about a lot of these geopolitical, military, supply chain issues for many years, which is kind of how I found her. Basically, she's been a wonderful, insightful voice of wisdom that I've found very useful over the last few years. And so I reached out to her because I felt like the area that she specializes in is very topical for us as investors and for our clients as well. And then also felt that she had a really unique insight that she had demonstrated over time. And so what I want to do kind of without any kind of further delay is kind of begin the kind of Q&A that Velina and I kind of discussed, and then we'll summarize some points as we kind of go. But I really did want to say just how grateful we were to Velina to make her time available to us to really share her insights, because I have tremendous respect for them and I hope you'll see why.
Thank you very much for the invitation. It's a great pleasure, and I am delighted to be with you today and to discuss some of my most favorite topics. So first and foremost, I would like to stress that my work has been derived from more or less 20 years of professional career based on an academic background from politics and economics. So I've combined both, and afterwards also working in the think tank landscape here in Europe, being in charge of the Austrian Institute for European Security Policy as a director since 2018, which is basically a classic think tank dealing with Austrian and also European, mostly European stakeholders and decision makers. What I have been doing specifically over the last 13 years is more or less strategic foresight coupled with trends analysis. In cooperation, of course, with our biggest partner, the MOD, the Ministry of Defense, and obviously it is no secret that scenario planning and strategic foresight has always been one of the main areas of activities for the MODs all over the world. Also, meanwhile, I'm an instructor at the Real World Risk Institute, led by the best-selling author Nassim Taleb. So I'm very much also into systemic risks and also geopolitical and geoeconomic risks. So what may be interesting for the audience is this kind of unique approach that I've developed over the time in order to not just reflect on global developments and system shifts, but also in order to be ahead of the majority of security and geopolitical experts in terms of assessments and scenario planning. So this approach is based on the one side on systems thinking, and it has combined basically the 5 most important systems: global trade, global economy, global energy, global finance, global monetary systems with their networks. And obviously after 2007, 2008, there was the first real observation, not just scientific one, or also in the financial world, that there was a new phenomenon, namely systemic risks. And then in combination with my background, which is realpolitik, this is a perpetual struggle for power, coming from the States, but also meanwhile from transnational companies. So this kind of perpetual struggle for power, struggle for mastery in this, kind of constellations between state and non-state actors. And also, of course, geopolitics and geoeconomics. So this kind of combination, puts me in a kind of a pole position when it comes to scanning signals, weak, strong ones, and then, analyzing obviously the signals in order to provide trends analysis. And based on this trends analysis.
I don't mean to interrupt you, Velina, but that was really how your work kind of came to my attention. In particular, probably the most noteworthy example. There's 2 that I'd like you just to discuss briefly. One was, I think, was back in 2015. You had kind of coined this term of dragon bear about essentially a kind of geopolitical alignment, for instance, between China and Russia. That's definitely playing out now. I know you were early on that. The second thing, of course, is to talk a little bit about, China now in the after this Russian invasion. And those, to me, are kind of, 2 areas where you've really demonstrated like a wonderful insight. If you could just talk a little bit about those 2 insights, please.
Exactly. So I was just about to finish that this was anyway my last sentence about my approach, the way I work. But based on that, and this is one of the examples, I coined the dragon bear as a kind of a modus vivendi of systemic coordination between China and Russia in relevant systemic or let's say strategic domains. And I will explain a little bit more what is it about. But the most important thing is, of course, that to understand, so to say, to highlight is that these are all long-term oriented trends. So it's, of course, not meant for the daily analysis or assessment. And obviously in 2015, when I was pointing to the dragon bear, I was more or less in the minority of experts because the majority was absolutely convinced that China and Russia would never come closer because of historic reasons mostly that they have never trusted each other, have been, involved in conflicts, and so on and so forth. But what is the dragon bear? Basically, this is now, of course, something that is already a reality, a geopolitical reality. It is neither an alliance nor a kind of an intent in this Western understanding or as seen from Western concepts, but it is actually an tactical, asymmetric relationship between China and Russia to navigate through this transitionary period of the international relations we are right now. And there are three main reasons, three main goals behind it. The first, of course, is to survive. So states behave first and foremost always in terms of survival, and of course maximizing national interests. Second, important, so it's important for both to survive while navigating these transitionary waters of global affairs. Second, of course, is to create credible, and here, of course, I stress the word credible, counterweight to American global power projection, because United States is still the sole state actor with global power projection capabilities. And the third is also to create alternative institutions, so alternative structures, but also alternative connectivity in this transitional period of global affairs. Of course, why? Because this would not be under American control or under American influence. And one example only, for instance, in the wider Eurasia, in Central Asia, and parts of South Asia, China is pursuing kind of terrestrial connectivity that would not be under American influence and would need, of course, Russia to provide specifically for security and diplomatic clout. So obviously China is predominantly setting the tone in this asymmetric relationship, but Russia is still very much needed from China's perspective in various ways. One, obviously, is to be a security provider. Another important point because of its major diplomatic portfolio and also foreign policy experience, specifically in international and regional formats.
Well, in here, I just wanted to summarize that after following Velina's work for a number of years, I reached out to her just because it's clear that the nature of her insight very relevant for the markets of today. I mean, we've got a land war in Europe for the first time in 7 years. It's really remarkable between great powers, basically. The other thing I would highlight, she didn't touch upon it here, is that one of the things that I thought was remarkable about Velina is she actually was kind of on record, kind of predicting the Russian invasion of Ukraine when a lot of people thought it kind of couldn't happen. And so for all those reasons, she had a lot of credibility with me. And so what I really wanted to do with her is to kind of, use her mind, which I have great respect for, and ask her about kind of specific scenarios, because there's certain research conclusions that we've reached. And we wanted to know how she viewed the world, if those things were true, and also just to try to explore what she thought was going on in both kind of the economy and military and political sphere. And so now we've asked her to talk a little bit about, so this was kind of, Russia and the whole Dragon Bear coalition essentially between Russia and China, which is frankly clearer and kind of darker now. And then we kind of go on to talk a little bit about Taiwan, because that's a concern I think that's been high on in our level of concern in terms of we had one form of military adventurism, and could we see the Chinese going to Taiwan, for instance? And so the next bit is me having that discussion with Velina about the topic. Would it make sense to kind of have the view, I guess, just me looking forward to making the assumption that that China is already much closer to Russia than anybody, has thought perhaps so far, and that could be a big part to, in my opinion, now wearing my investment hat, let's say potential capital flight from China in terms of investors trying to avoid the fate that so many investors found in Russia, which is they got locked up within, their capital was locked up in the markets when Russia kind of invaded Ukraine. And of course, the sanction boom kind of hit and really kind of broke the world. And as you may recall, and this just reiterate for our readers, one of the views that we've had for some time is that this was kind of a de-globalization cycle that was really reversing the 75 years of ever deepening globalization that's kind of driven the world. And this, to our research, is kind of the kind of key theme through which we're looking at all our investments to try to move from the last cycle's winners to the next cycle's winners. And so that's why, watching your instincts on this very early, Velina, you really kind of nailed that, which is one of the reasons that I kind of reached out after following your work for so long. Well, maybe what does this mean in terms of China and how, lesson from them perhaps with, Taiwan or how you see them kind of going forward?
Yes, before I move to China, I also want to clarify this is very important for the systemic geopolitical context. As you said, of course, there are major turbulences going on in the global economy, in the global finance and trade systems. And as I said, we have to, my approach is derived from looking carefully for all relevant signals, strong wicks, which point to systemic shifts in this, within these networks. So obviously, the decision for instance to deepen the relationship over the last 8 years was a mutual one by Russia and China, in order to have a kind of, insurance in terms of, first and foremost, of course, the impact of the transition. Nobody knows in what kind of system we are, going to end up. Will it be a kind of a bifurcation of the system? That means two power centers, or will it be a kind of Pax Americana 2.0? That means that after the war by Russia, United States would emerge once again as after the basically Second World War as the sole state actor with global power capabilities, even more strengthened than before. So in a sense, it's very important to identify the context before we try to analyze also the motivations and the interests of China or Russia in this case. And as you said, it is also very important that we have been in a deglobalization cycle already in 2012, 2013. So this is nothing new. And this will definitely have an impact on the decision or the decisions of both. Now, of course, Russia doesn't realize that it's no longer about, becoming a superpower. So in this next phase of the international relations is going to be all about China and United States. And once again, there is another trend that has been ongoing even before Trump, which is the trend of decoupling. It was just called differently under Obama's administration. So this kind of decoupling or entangle, basically drifting away from this systemic entanglement between Washington and Beijing is a trend that is going to be decisive for Chinese policies in this particular phase, given, of course, that first and foremost, it is a key year for the political elites. And second, of course, it is still about tackling the pandemic. So China is still very much in this, in this kind of approach of not getting away with it, on the opposite, due to the lockdowns. And finally, of course, because there are some foreign policy decisions that will be very much relevant for the Chinese future foreign policy. Namely, you mentioned Taiwan, and right now there is a lot of speculation that Taiwan scenario may be a similar one to what Russia basically launched on February 24th against Ukraine. And I would like to stress that there is no similarity between these two scenarios. Taiwan is a very different scenario in which China, first and foremost, is not intending right now to attack militarily. Second, of course, it is right now capitalizing on the diplomatic two-front scenario, because United States fear that they have to deal simultaneously with both escalations. So it serves certain tactical interests in diplomatic terms. But for China, the way how it will deal with Taiwan, it will not have anything to do with what Russia actually did on February 24, namely to go or win on Ukraine, to make a move on Ukraine militarily by launching a full-scale war, which in fact backfired against Russian interests. So what China is right now doing is carefully observing how the whole response by the West has been organized from day one, in terms of sanctions, in terms of political dialogue, and also in terms of concrete steps to increase the pressure on Moscow. And this is kind of a learning process for China in terms of possibility in the future if China decides to escalate on Taiwan. But I personally do not anticipate such scenario. On the opposite, I do argue that China has no short-term interest in attacking Taiwan. On the opposite, it will actually seek to undermine the social, economic, and political fabric of Taiwan in the long term. It has a lot of time until 2049 to do so, and it will be an approach which I think is going to be a death by thousand cuts, in which at the end China sees its
Well, and here I would just preface the point that, Velina was kind of clear in terms of, that perhaps some of our risks about China going into Taiwan were premature. But here we kind of have a different slant on it, in that those of you who've been following our market happy hours for some time might recall that late last summer, early fall, we actually did kind of a special edition market happy hour where we had an author, Denny McMahon, to talk about, he was the author of a book called China's Great Wall of Debt, where basically he had outlined, the preconditions that went into creating a $60 trillion asset bubble in the Chinese property market, which we think is frankly broken, and it's now a down cycle. And I think that many people are still getting their arms around that. Of course, if our investment conclusions in that are true, then kind of global growth going forward looks kind of nothing like it used to. This composition, its drivings are all very different. And so basically, in this section, I kind of asked Velina to kind of look at the world as we are and hear her views on that. The things that our research has identified, and it's been a key part of how we've been navigating our markets recently, is that essentially the Chinese property market, which is a $60 trillion asset class, one of the biggest ones in the world, in our opinion, is irretrievably broken, and that with that, it's taken Chinese growth with it. And so, like you, I'm kind of a lover of history, and if you go back and you read what happened in the lead up to Japan's and kind of long bomb invasion, not invasion, but strike on Pearl Harbor. One of the things in my read of history is they moved because they were kind of desperate, because they felt like they would never have a better opportunity, and that they were slipping away from kind of the US. And so I guess with that context, with me having that fear, and trying to use, your proven insight in this, if somebody told you that, Velina, I know for a fact that, Chinese economy is going to be impaired going forward, and this whole salesmanship job the Communist Party's done is going to fail in terms of like the inevitable rise of China, how would that change your thinking, or what do you think the world might look like if that were in fact the case?
Yeah, first and foremost, we are dealing with scenarios. That means alternative futures, and nothing is certain. The only certainty is actually that everything is shifting. So change is the only actually, thing that is for certain. Second, China's rise is also something very much undetermined, in a sense that we still don't know whether China will actually succeed in transferring its huge geoeconomic cloud, which was definitely on the rise over the last 20 years, into global power projection. So this is obviously the goal of China, for which China also needs to decouple from United States, to emancipate, so to say. That would also mean, of course, to create alternative networks in all these relevant socioeconomic systems, which will be costly, which will be also painful process. And given, you know, the domestic processes at home, once again, this is not clear that it will be successful. Also, what is important to understand is that the decoupling is a mutual process. Also, that means that United States equally seek to decouple from China, and to actually engage other like-minded partners in the Indo-Pacific and in East Asia, in order to actually reconfigure these networks and reconfigure also supply chains. In this kind of mutual decoupling, there are not so many options in an interconnected world. So the interconnected world was not was more or less an unforeseen and unanticipated effect from the globalization cycle prior to the deglobalization cycle. So the outcome of this previous globalization cycle was this kind of unforeseen interconnectedness. And right now, nobody can tell how this interconnectedness will actually get less connected, right? So this is once again going to be a very painful process for not just states and companies, but also for the population. Right now, on the one side, we are dealing on the one side of the coin, that means the West, we are dealing with a lot of socioeconomic repercussions, such as, for instance, the disappearance of the middle class as we knew it from the 20th century, which was one of the biggest phenomenon of the political systems in the 20th century, following the end of the Second World War. At the very same time, on the other side of the coin, what we are observing, for instance, in Asia, is exactly the rise of a middle class, and this middle class will seek to emancipate and will formulate its own political goals, which is going to, of course, put a lot of pressure on the political systems and on the political elites amid a trends of increasing authoritarianism in all of these systems. So on the one side, democracies will be in a transformation and will suffer from from the weakening of the middle class. On the other side, there will be a rise of authoritarian systems. I'm sorry, and of course, with the pressures coming from the bottom, and all of this will create a very volatile environment for companies, international and also national ones, to operate and to actually thrive. So in a sense, what I foresee, what for me will be really key in terms of signals for systemic shifts is, first and foremost, of course, it's all about political economy. So which system is going to succeed, right, in this competition? It's a competition between two systems, first and foremost. So which one will be more appealing? Which one will create more networks around itself? Right now, China is I mean, we should remind ourselves of the fact that China has become a trading partner #1 of almost the whole world. Then, of course, it's all about who is going to ride the technological revolution, the fourth industrial revolution. We are in the middle of it, and that means that the victor of the fourth industrial revolution, the power that will, and it's still once again a competition between China and the United States. So the power that is going to ride the fourth industrial revolution is going to also be able to impose its rules of the game. Then it's going to be a lot about ideology, as I said, and finally it's going to be about how they are able to forge partnerships, alliances, and create concepts about how to not just survive, but get better in this transitionary period.
Well, and here I would just take a moment just to try to crystallize some of the things that Velina and I were talking about. I mean, for instance, those of you who are our clients, particularly invested in our more our longest running, let's say, global opportunity strategy that Zev and I manage in particular, have seen a number of portfolio changes in the last, say, 6 months and a year, including the exit of a lot of the large cap tech leadership that frankly we owned for years. And that's why we wanted to bring this interview kind of with Velina to you, is that, we made a decision late last year that we looked at the world and felt like the existing current leadership that had been so successful for so long, we felt like as the world was changing, the leadership would also change, which is why, our portfolios have seen in many cases some of the largest changes in composition. You're seeing defense stocks, show up. And so this is just one example of how we're trying to translate the kind of changing world that we see, which we do believe is defined by this deglobalization cycle, essentially the reversal of 70 years, 75 years, frankly, of increasing integration. It's all kind of shattered now, and we're going to have to kind of create a new world order. So, of course, as investors, we're trying to find companies that can profitably address the world's problems and create profitable solutions. I mean, that's what we do in terms of our investment process every day. But that's why these concepts are really so important, and that's why there's been change in composition of portfolios. Is that we really are have reached a conclusion that the world is kind of changing, and our portfolios need to change with it. We think that investing in solutions is a way to go. And so anyway, that was a little bit of kind of summarizing Velina's ideas there. We're going to talk a little bit about Europe. We'll talk about India kind of in a minute, and here are some of the other issues that we wanted to get Velina's views on. Here, a follow-up question I would have, Velina, is that clearly I'm deferring to your well-established expertise, but if you, for instance, if China was going down a path of more conflict, I guess, with Taiwan, giving some of these, frankly, I think if they understood how weak their economy is, they'd probably be doing a little faster. I mean, is there anything that we would see as outside observers that would suggest that maybe their potential conflict was getting closer?
Yeah, I understand that you're trying to bring me into a kind of scenario in which there is a possibility for such a military conflict. And once again, there is zero, China has zero interest in starting such military conflict against Taiwan. And since I am someone who is, very much coming from the angle of realpolitik, it's always about the national interest. First and foremost. It's not in the national interest of China to launch a military attack on Taiwan. Let me be very clear about it. Why is it? It's very obvious why. First, because the prospect of winning against Taiwan is not there. So you have a huge risk coupled with huge critical uncertainty. And that is that you don't know how long it will take, and you don't know whether you will be successful. And in this particular, given this combination, no political leader will actually take a decision to make a move on Taiwan. Also, as I presented, there are many other better options for China to do so. If there is about any kind of foreign policy adventure that China may seek in order to also, specifically for Xi Jinping, to also serve the interests of those representatives of his closest circle, who are military hawks and are really into military adventures, then I actually argue that military tension and direct confrontation with India is likelier and more realistic in short term than actually a military attack on Taiwan. And there is a third very important dimension. Still, of course, China is benefiting from an interconnected world. So this kind of decoupling is not something that is going to take place in 1 year or in even, in a short-term window, but it is actually a process that is creeping and, long-term oriented. It may take a long time. And in a sense, if you have a military attack on Taiwan, even one day of blocking the Strait of Taiwan would mean devastating effects on the global economy. Take the incident with the Suez Canal, with being obviously one of these global choke points for supply chains. And this would be multiplied by, I don't know how many more times, because of course this particular area is a strategic one for not just China and East Asian partners, but also for United States to blockade sea transport, right? So in a sense, it does not make sense from this perspective either.
Well, there I had to go one more time back to Velina because, again, we've been worried for some time about unanticipated weakness within China, kind of forcing them, as I said earlier, to perhaps move earlier than they would otherwise like to, which was very similar to what the Japanese did when they invaded Pearl Harbor, attacked Pearl Harbor back in 1941. But Velina made an interesting point just about the rivalry that that China also has with India, and that this kind of gets back to a point we'll touch about in a minute in terms of kind of the rise of India, which was kind of a new concept for us we wanted to think about. But here we go a little deeper in terms of talking about the structural problems that Europe is facing and kind of how they may try to navigate through carefully this energy shock that frankly could be almost depressionary in scope, because the European political leadership made one of the most boneheaded political decisions in the history of politics in terms of nuzzling up to the Russians, and now they're not so pleased about that anymore. But here we talk a little bit about the challenges they may face along the way.
Yeah, and I would just reiterate, although we're holding questions till the end, please feel free to submit questions throughout. Thanks.
Things that our research is focused on for a long time is the systemic problems that are within the current European community, namely that they don't have a common taxing authority, unlike the US. And so what this means is that, and there's no kind of federalized debt. So what this means, of course, is each sovereign country has to stand behind their own debt, but the currency with which they're paying that debt is one that they don't control, unlike the US dollar. So Europe, in my opinion, has been mired in this kind of slow growth existence due to these systemic problems that they have. And so what I would ask you to contemplate is again, if I were able to tell you that Europe would be vulnerable to a financial crisis, or maybe even were in kind of a crisis like that, how do you think that would impact let's say, number one, maybe the ongoing conflict in the Ukraine, or two, this kind of global system that you've specialized in?
Yes, this is an important question because of obviously the integration efforts within the European Union, and there are anticipations that such kind of integration efforts will continue following the war of Russia against Ukraine. Now there is obviously a trend towards more integration, institutional integration, because we have to also differentiate between enlargement, which is also European integration, by expanding the borders of the European Union and letting new members more or less join the Union, and also institutional integration, which is inwards oriented. And in this particular case, what you've outlined has a lot to do with the fact that we have ended up with one specific trading partner being trading partner number one for all member states, and that is Germany. So we have obviously a center, of trading power at the heart of the European Union, and this trading power has established networks and deviations throughout the European Union, where more or less, as I said, all other 26 member states have been engaging with Germany. And once again, because we have one currency, the euro as a currency has not the same weight if you look it from the south or from the east or from the west of the European Union. So it has also a different weight, in a sense that, of course, there were member states that have profited a lot from introducing the euro, like Germany, obviously, and then there were member states that haven't profited at all from introducing the European Union, but actually increased this indebtedness and also the structural problems like the southern or some of the Eastern members. And I think that despite all the efforts to further institutionally integrate the European Union, these kind of problems will remain, because these are structural problems. No matter what the ECB, the European Central Bank, or other institutional actors are going to do, right now they are planning once again to introduce huge programs like the next generation of, investing billions and billions for the recovery after the pandemic, or let's say the greening of the economy, basically meaning the decarbonization of the European economies. Once again, investing billions and billions. I don't think that the structural problems will be removed by that. So what I anticipate is are two trends. On the one side, there will be a core mostly in the Western, in the old, as we say, in the old European Union members. That will be pushing for more institutional integration, because there have been already at a different level of integration, and they have been cooperating since the end of the World War II, and they are also a direct neighborhood. It's much easier. This is something that has been already shown, that basically it's the most efficient way to have trade with your direct neighbors. And then there will be another group which will consist of Central Eastern European members, which will be a kind of a fragmented bloc that will not seek to further integrate. On the opposite, there will be a cleavage, a growing cleavage, I'm afraid, that will basically grow due also to the fact that their approach, not just to integration, but also to foreign actors, to countries like China specifically, but also Russia, is very different.
Well, hi, everybody. We still have another couple of segments from Velina, but we're starting to get some questions, and kind of in the interest of time, I wanted to try to have as much Q&A as possible. So what we may do is skip this quick segment, where basically Velina and I just kind of have a conversation about this idea about the rise of India, which is really something that she really helped kind of open my eyes to. And of course, we're global investors, so we have the ability to kind of invest wherever we think our clients' money is best put to work. And the other thing I just wanted to highlight again is remember that in many cases, what we're trying to do is we're identifying problems, but the real reason we're kind of sharing those with you is, number one, we definitely want you to see the kind of issues that we're struggling with as a research team, but also to help understand that when we find investments that we believe are kind of solutions to these, you can see kind of how the research process works. And so, of course, Velina, with her insights in this very changing global world, is very useful for that. And in fact, what I was thinking also as well, Sam, in the interest of time, maybe we skip through the kind of conclusions we had as well. Maybe we go right to those, because there was a final short conversation with Velina, and I think if we just go to the kind of chief takeaways, that might be a nice point for us to reiterate anything that we these common points. Great. Well, so I think one of the things too, just wanted to stop and say, thanks so much for Velina for making her time available. I have tremendous respect for her insights, and hopefully you've found them as useful as I have. We'll have follow-up emails that will have kind of the full interview, so you won't have to see my face and listen to my questions so much. And I definitely suggest you take advantage of that opportunity, because I certainly enjoyed our chat. But if I were going to kind of summarize and just kind of let you know the things that we take away from this as a research team, I did think her conclusions, first and foremost, were interesting about Taiwan, that perhaps the Chinese have kind of been chastened a little bit by the blow up that the Russians have dealt with, and maybe that's an alligator we'll have to wrestle later. I certainly hope her instincts are correct on that. Although I would reiterate that our deep-seated concerns that we brought to you last year about the collapse of the Chinese real estate bubble could accelerate that. This whole idea, secondly, there's, rise of India. I started going to China 20 years ago when no one really thought about it. Never been to India, but it looks like maybe I'll be buying myself a pair of tickets and go see what's going on over there. Certainly that's one of the great things about having a global investment mandate, is there's lots of different solutions for us to try to find around the world, particularly in terms of not only who's solving problems, but the valuations that we're paying for these investments as well. This idea of deglobalization, I mean, we've been kind of yammering on about this for those of you who've been following our writing and in these market happy hours really since 2016. And if you think back about this briefly, there was the example of Brexit. There were the issue of the Trump tariffs that blew up between us and China. Of course, COVID in retrospect was an incredible deglobalization event. And war, frankly, is the ultimate deglobalization event, which is now underway in the Ukraine. So it seems to me that for the last several years, this is the way that the world is changing. And of course, this is why our portfolios, frankly, look so much different than they did, let's say, a year ago, because it was our judgment that as the world was changing, we need to have a new set of investments to take advantage of kind of that new world that was outlining. And so I do believe that globalization's here to stay, right, wrong, or indifferent. I think Velina definitely nailed this idea that the Russians and the Chinese are a lot cozier with each other than perhaps many people realize. At least Velina saw that coming. But that can mean a lot in terms of this breaking of supply chains, because China's been such a huge recipient of so many capital flows. If that's changing to, say, Mexico or Canada, or people who are sensibly a little friendlier to us, that has very major investment implications. And so we're very alive to that, and sharpening our pencils. We'll see what happens with Europe. Europe's been very much the disappointment in the global sphere in terms of growth. They have a set of challenges in front of them. We'll see if they can kind of rise to that occasion, particularly with the incredible energy inflation they're suffering due to their horrible decision to cozy up with the Russians. And then I still think maybe one of the most important but underreported topics is the steady downbeat of horrible data points that continue to come out of the Chinese property sector, which has kind of collapsed. We've had tremendous property defaults, and I think unit sales there are down 40 or 50% year over year. This was before, under the COVID zero program, they locked down kind of the entire country in their homes and stuff. So I really think that all the scope of these global changes is why we've made our portfolios as kind of defensive as they are, and why we've changed the composition kind of as much as we have. So anyway, but here I just wanted to summarize. This is kind of the bridge between the concerns that we have, the way we think the world is changing, and then the appropriate investments to kind of meet that world. And so kind of with that summary, Alex, were there any kind of questions that we're getting kind of from the audience that we could talk about?
Yeah, I think Rick had a great question and maybe put the finger right on it. Will China use their military to influence Taiwan indirectly, yet ever so threatening? And I feel like she touched on that, saying that maybe death by 1,000 cuts, and they're looking to have this done by 2050. It's not necessarily tenable right now, Lewis. Is that what Velina's take on?
Yeah, I thought in the conversation I've had with Velina, she was very clear on that. And so I definitely think that as you outlined it, that was the conclusion that she's outlined. She's made clear to me as well.
Okay. And
I think it's interesting to note that I think a lot of our arguments against the military activity between China and Taiwan, if you look back at the history of World War I, people made similar arguments that, there was such an intertwined world and so much trade. And so there's no way that, it was in the interest of the parties to go to war. So, that was just one thing I was thinking about when she seemed so certain. The other thing is that I think, probably the internal politics of China would have a lot more to do with, a decision like that. If things really went south for the ruling coalition in power struggles internally, that's typically when governments look for outside scapegoats. And, maybe she's right, it'll be India rather than Taiwan, or hopefully it'll be neither of them. But
well, no, I mean, those are those are great points. I mean, clearly we're all dealing with an investment world that, you know, none of us have ever lived through. You'd have to go back 100 years, frankly, to see a world that kind of looks like this. You know, the other thing too about that is, I think we were just talking about this today, it's also the second and third order impacts of all these things. So there's the Russian war and the Ukraine and everything. But I can tell you one of the most alarming things that I watch on my Bloomberg every day is the startling rise of the price of credit default swaps against sovereign default of many Latin American and particularly African countries. I've never seen such a ubiquitous and violent rise in what can only be a precursor to very serious political unrest. And I don't kind of know what that means really, if we're talking about kind of failed states and huge immigration waves. I mean, I don't really know. I'm trying to keep an open mind about all this. And so I think we're fortunate to be able to have somebody like, you know, Velina who deals with these concepts all the time. But I think we have to kind of constantly revisit our assumptions. I think you're exactly correct.
Yeah, and based on the conversation with Velina, where are we seeing our different foreign exposures change? Where's the risk on the near term, long term? Where are we seeing opportunity?
Mm-hmm. Well, no, that's a great question, Alex. So again, you know, clients have probably seen, you know, we do have a number of international investments, although frankly, a lot of this has been based in the US and kind of more defensive names. You know, we have had historically some exposure to the Chinese markets. I don't believe we do right now. And frankly, I think it's very unlikely that we will going forward. It was pretty spooky to see the entire Russian market shut down and foreigners get trapped, you know, based on the adventurism of authoritarian leaders. So I think that's certainly something we're going to be very careful of kind of going forward. But if you just think about, you know, potential ideas that we're thinking about, frankly, there needs to be a whole reconfiguration of supply chains. You know, clearly our Mexican neighbors, our Canadian neighbors, you know, there are people who have been much more dependable politically that may end up getting more of our incremental investment because, you know, you could argue that for 30 or 40 years, we created a world that was kind of very efficient in terms of low cost, but it's clearly been exceptionally fragile and very susceptible to problems in China or problems in the supply chain. So I think the world is going to have to deploy, you know, frankly, trillions of dollars over many years to kind of solve some of those problems. And, you know, we think those are wonderful opportunities for our investment.
Okay, so some opportunities there. A specific question from Rich. Will the German Greens allow the ruling coalition to maintain the country's nukes? And will the Germans be embracing drilling a few more gas wells? Is that going to help Europe with their current energy crisis?
Well, I mean, Zev, I know you've been watching that closely. I mean, would you have a kind of a quick conclusion?
I mean, there's been some talk that the Greens are being a little bit more conducive and that they understand that the problem that Germany is under, but you know, it doesn't seem like the Greens are going to massively change their tune. Of course, next winter when, you know, Germans don't have enough heat for their homes and, you know, Germany is in recession from high energy prices, you know, the Greens may not have as much power as they have now. You know, that's really what will ultimately change German and European energy policies if there is some sort of sea change in politics in Europe because of these problems. I would
and a point I would build on upon that is that I mean, let me be very clear on one thing in terms of, say, my background or Zev's background. I mean, we've literally kind of spent our entire careers developing a specialty in, let's say, commodities, natural resources. These things are frankly leading the market over the last 6 months and 1 year. And frankly, we do think that's probably just the beginning of what we think is going to be, in my opinion, probably a decade-long process of reconfiguring the supply chains, putting money to work, because clearly we have, you know, recent events have shown that there's tremendous problems in bottlenecks, and we have investments in the wrong place, investments that should have been made that weren't, you know, and this is a struggle for us kind of as a society to get through. But I can tell you that our research team, with its background in global contacts, we feel like this is going to be a wonderful opportunity, for us to be able to put some points on the board for clients to be able to kind of go back to the areas in which we have specialized for so long. So let me be very clear that I do think that for the market, this is going to be a challenge. It already kind of has been. But I think if you take a look at the recent performance that we've demonstrated, that we have the ability to kind of look very different from the market and have a better result for clients based on our expertise. So I do believe that the future is going to be volatile, but frankly, I'm exceptionally optimistic about our ability to navigate through that. And I think the recent performance demonstrates that. Mm-hmm.
Okay, so we've seen volatility in the broader market, but there are some areas for opportunity and places for us to be optimistic, and they just so happen to be Lewis and Zeb's specialty.
Yeah, imagine that. Imagine that.
Well, good. Well, questions coming in around U.S. oil refineries. Have either of you heard anything about things shutting down, things that could be impactful to cost of gasoline, if that's going to help or hurt energy independence and inflation?
Zeb, you want to take that?
Yeah, I mean, I saw that question. I don't keep really close look at the balance, refinery balances. I have not heard of any U.S. Refining capacity coming offline. I mean, there's a lot of, and the refining market is a worldwide market. There's a lot of product that moves from Europe to the United States in terms of gasoline. And then, of course, there's a lot of Russian and Ukrainian refineries that I understand, have been having trouble getting product to Europe. So the movement of refining all around the world is really messed up. And that's leading to, as I'm sure most of you have seen the headlines, a really acute diesel shortage, which is exacerbating a lot of problems with trucking and obviously crude and gasoline prices for consumers and stuff. But I don't think that that's correct, but I don't want to say that it isn't, that question is correct in terms of some refining capacity being shut down permanently. I don't believe that's true, though.
Yeah, well, I can tell you, just in terms of new opportunities, I guess it was about a week ago, I called the most insightful, kind of refinery energy analyst I've known for 20 years, because I have a great respect for his insight into refineries, because I knew I would get a quick no if the answer was it wasn't worth further work, and we got an encouraging yes, which was stunned me. So we have a lot of neat opportunities in which we've not invested recently. I mean, it really is a scope of opportunity. So let me be really clear. There's a lot of things that are not that are challenging, like that we're talking about. I mean, but look, honestly, we get paid to put money at risk in thoughtful ways to help it grow for clients in the long run. And good, bad, or indifferent, up markets, down markets. That's what our clients pay us to do, and that's what we're doing right now. But let me be very clear that change is not bad. Change is good. I mean, change could be scary for people that don't do work or just want to continue to hold last cycle's winners. Our view is that the cycle's changing. We're going to have new winners. And so you take a look at if you're a client, take a look at your portfolios already. They've changed in terms of their composition, stocks, sectors, markets, right? This is all, it's all good. It's all encouraging. This is what we get paid to do, and we're excited about it.
Absolutely. And one last question around Ukraine. Any thoughts on what the build out or the rebuild of Ukraine is going to look like? Is that an opportunity for future investment?
Yeah, that's a good question. I mean, our research to date hasn't really focused on that. I mean, what we've really been more focused on is kind of some of the obvious problems that are stemming from this. I mean, like the wheat prices, tripled or quadrupled because Russia and Ukraine are both such a huge part of the global grain markets. That, of course, in my opinion, is what's driving these credit default swaps to high prices because it's really putting tremendous pressure on particularly lesser developed states, particularly the big wheat importers in North Africa, for instance. And so the world is definitely changing kind of in profound ways, but I think that, if we were going to come up with a list of all the ways that the world has changed so quickly and powerfully, and I would suggest irretrievably in the last year and a half or so, I mean, it's going to be a really long list, but again, just let me be clear that I kind of feel like we're, as an analytical team, we're getting thrown in a briar patch that we are happy to be in, which is an area where it's useful to understand natural resources. It's helpful to understand how commodities work and the companies that make them and profit from them. This is a very different set of conversations than we would have had a year or a year and a half ago. And as Alex said, Zev and I have both spent several decades specializing in these areas.
Yeah, I would argue that in terms of stuff getting blown up in the Ukraine, the best way to benefit, or the most obvious way, is through the defense industry, which has to replace. I mean, I've seen some reports that a third or more of our Javelin missile systems, which I think are made by Raytheon. I shouldn't be mentioning company names. Sorry. Or haven't or have been depleted. There's a whole lot of that going on. And in terms of rebuilding the rest of it, I mean, obviously that Azovstal plant in Mariupol is offline and is destroyed pretty bad. That's actually, I believe, the largest steel plant in Europe. Is that right, Louis?
Ukraine was the world's largest and most disruptive, lowest cost steel exporter, and its quick exit from the market created kind of chaos in the steel chain, which frankly presented a number of investment opportunities for us in our strategies. So again, I don't know, how many normal research people spend all the time that Zev and I have in the weeds in terms of understanding what countries are big suppliers of what and how the product flows. But like I said, frankly, the world has gotten to be a little scarier. It's definitely different from what it used to be. But I do feel like the opportunities for us to kind of outperform even in a challenging market are, frankly, I've never seen a greater, an opportunity set about which I feel more excited in terms of our ability to put points on the board. So again, volatility doesn't have to be bad. I mean, I don't know in terms of the pace of how all this is going to play out and so forth, but remember the big picture. The market is trying to do something very simple. The market's going to make something very simple happen, which is that if we have shortages of products, the market's going to find a way to get us the products that we need, and the companies that can provide that or build the capacity to do that or ship it, they're going to be rewarded because they have to have the money and the profits to make it happen. And so that's why when I take a look, 5 or 10 years out, it really does feel like a very exciting time to have the kind of expertise that that we do. It's going to be volatile along the way, but I'm frankly looking forward to the journey.
Well, gentlemen, I want to say a big thank you for the insights. I want to say thank you to everyone who submitted those thoughtful questions, everybody who tuned in, joined us today. If you enjoyed what you heard, certainly we have listed here ways to follow Velina's work, her website, Twitter, and podcasts. Certainly believe she's going to be waking up to a few new followers tomorrow. But again, appreciate the time. If you don't mind completing those surveys, and if anybody's questions weren't answered, we can have our team follow up with you. But have a wonderful rest of your week. Appreciate the time.
Thanks, everybody.